go live. And we're gonna try to go live. Hold please. Let's see. Okay, we're gonna go live in Real Estate Fight Club.
You are?
Yes. All right. And we call these episodes Better Call Saul. So we have with us Saul Klein. I like to call you the father of real estate. Hello, Saul.
Good to see you.
It's an official title. You need a crown and a king. And a king. Yeah, right. We have Rachael Real. She's the broker owner of what is it? Rachael Real Estate, right?
It's just me. Yeah, me, myself, and I.
Your name, exactly.
Right.
We have Jen.
Keeping it simple.
Sheil?
Sheil. Yep.
Sheil. Okay, from Ruoff Mortgage, and Ann Uchtman from Star One. So, Ann, what are we talking about today?
Guys, this is a doozy. So it's very important though. There's been a lot of talk lately, especially on social media amongst realtor groups, about how are you getting your VA buyers contracts accepted? And the comments start filling in, and people seem to think that financial status is a protected class. When people start talking about, oh, my sellers didn't want to take an FHA offer, I advised them that I would rather have a conventional or this VA offer. You can't discriminate against VA buyers. They don't understand the rules. So I thought it would be a good topic for today because obviously it's very relevant.
Well, there's a ton of misconceptions too about it. Jen, can you give us like some background or what you know about FHA and VA loans?
Right. So FHA and VA loans were created to provide more financing options. They're financed by different entities. So Fannie Mae and Freddie Mac will be financing conventional loans, where VA are insured by the Veterans Administration and FHA is insured by HUD. They're just different product types. And I think over time, people have been think that, oh, that's for a specific buyer, but FHA has some benefits that allow you to calculate, a debt to income a little differently. It doesn't necessarily always mean that they're less attractive buyers.
Yeah, that was like one thing that I've heard too. It's like FHA is for first time home buyers only, or buyers that don't have a lot of money.
Right. Yeah, and there are advantages. I mean, we were talking about this before the call. If a buyer doesn't have as much money to put down, that gives them more freedom to be able to cover an appraisal gap. So there are advantages to doing a lower down payment loan. Some conventional programs, you can do 3% down or 5% down. And even as recently as last week, I had an appraisal shortage that we fixed with mortgage insurance and reducing the amount that the borrower put down. It was the same borrower, same loan. They were happy because the sales price lowered a little bit on paper. Their payment really didn't change that much from what they were already pre-approved. And if we're preparing the buyers correctly, we can allow or prepare them that their payment might change once the appraisal comes in, but it's still within their budget, then they're happy and moving forward. So I think it's all in the setting of expectations for the buyers, especially when the agents are writing the contract. Instead of saying this is exactly the way it's going to look, if we say this is the range of what it's going to look like, then there's room for them to modify once the appraisal comes in.
Right.
I love that word, range. It's my favorite word in real estate.
So Jennifer, just to kind of from an academic perspective, right? FHA is an insured loan where there is an insurance premium, a mortgage insurance premium. It's an amount paid every month. It goes to pay insurance. Insurance is there to mitigate risk. VA is a guarantee program where the Veterans Administration guarantees a certain amount. And what this does is it lowers the risk. So lenders, remember that these loans are packaged and sold in a different marketplace. And so what lenders can do and what lenders are willing to do with regard to down payment, with regard to debt to income ratio, is they're willing to take risks. And if different programs or different loan packages then can be made available to consumers, then maybe you'll find that different consumers might fit better into different packages. But in a marketplace where everything goes really fast, nobody really has to have all that much expertise to even sell real estate because it's just moving so fast. Then you have people not learning about all the benefits. And instead of being a real estate professional and understanding the tools that are available to help the real estate professional help the consumer, they just go for what they believe, what they think. It was interesting on the thing we watched, Rachel, was the Main Street Association of Realtors talked about, they Googled FHA and VA loans, and what came up are all these negative, because that's what it does, search engine, right? And so anybody that Googled it and read all this stuff, they would just say, oh, I'm never doing that. I'm never gonna, right? So important for people to learn, talk to lenders, talk to people who understand these packages and these loan programs. And it gets back to knowledge is power.
Yeah.
And something that you think might not be beneficial, you brought up the one, if you don't have to put as much money down, then you'll have more money if you have reserves. So if you bid over, you actually have a chance to buy that property, where I guess a lot of agents today are allowing their buyers to overbid without validating or verifying that they have the resources to cover the overbid.
Oh my God.
It's terrible. The burden is on the listing agent, honestly. I mean, it's the buyer agent's job to provide that information. But if they don't, and my seller wants to take that offer, it's my job to find out, you know?
Yeah, right.
So,
well, and be like, there's other ways you can write a contract too, if you're nervous about the appraisal. But to your point, Saul, is like, if they have money, and we already know they're going to have to fill some kind of gap somewhere, right? Either like the appraisal gap or like something, or they're going to have to make repairs. It's better for them to keep their cash than to put it down on the loan. And so like, isn't for like the FHA that you were saying the debt to income ratios are like different? Is it the same for VA too? Or is that just like you have to?
Yeah, so a VA buyer could theoretically do 100% financing, which then if they did have money in the bank, they could cover any appraisal gap. So that would make them more attractive from that standpoint. The only thing that I think scares, at least in my opinion, I'm doing about 25% to 35% of my business is government business, USDA, FHA, VA. And I'm still getting accepted contracts for those. The agents that are winning by submitting an offer in that environment are preparing their clients and the sellers that if there are small work orders, that they'll work it out, right? Mm-hmm. So the big ones that I always say is you've got broken glass, missing handrails, GFIs in the kitchen and baths. Those are the things that FHA and VA might be looking for. And generally it's because of safety, which as an agent, you want your client to purchase a safe home anyway. So those aren't, in my opinion, deal killers. Over the 20 years I've been doing this, I can't even remember one deal that fell apart because of work orders. They're minor, right? So if you're
I've never had one fall apart either.
Right. I mean, they're usually, reasonable, again, setting good expectations in the front end, buyers agents and sellers agents working and cooperating together, telling your home inspector when you're doing your home inspection, hey, this is the financing on this property. If you see any of these items, a good home inspector is going to know what those are initially anyway. If you're waiving inspections, which I'm seeing a lot of, then as the buyer's agent, if you're walking through the property, be more aware of what the property conditions are. And I've had some sellers or buyers agree to fix those items themselves. So they're going in and saying, if any of these things come up on the appraisal, we'll fix them.
I just feel for playing devil's advocate from the seller's point of view, it can seem like, because we're having different conversations with them, right? Like, because if it is an FHA buyer, I mean, I guess work orders can come up on a conventional appraisal too. It just doesn't happen as much. So sometimes they can feel like it's like an extra inspection. And so then we have to like educate them like, no, it's not. It's really just like anything that would come up anyway. Like, a handrail might not come up on a conventional one or whatever, but like, it's pretty easy stuff. What do you have something to say, Saul?
I agree. Yeah. The only other thing is like peeling paint, but I feel like the standard and quality of homes has come up. I mean, I don't see many work orders anymore. I think people are taking good care of their homes and agents are preparing them. And if you're going in and listing the property and you're looking at items, I mean, even if even if it's not required of you, you're going to maximize the value of your property if you get it to a best condition anyway.
Yeah, and I think, and that's a great point. Again, these are financial tools. The seller should know about the financial tools that are available. The seller should know that they're going to be different now, this market hides a lot of things, right? So, but in normal circumstances, the seller would like to have a number of different ways to sell the property under a number of different conditions. And a good listing agent would be able to figure that out. And so if I were listing, I'm not anymore, but if I were listing properties, I would want to know what FHA requirements are, what VA requirements are. If we're in a marketplace where the financial fits for those types of loans, I would want to make sure the house is ready, the home is ready for an offer like that, because I want to give my seller as much, as many options as possible. So it's back to this education, knowing about it, knowing that it doesn't fit in all marketplaces at all times. But again, if you're a real estate professional, your job is to have as many arrows in your quiver as possible so you can provide those services to buyers and sellers.
I have a question for Jen. I know in the past the appraisals for FHA and VA have stuck with the home for 180 days. Is that still accurate?
If it's logged on the case number, yes.
Okay. So, and I think that's why, I think that's why a lot of agents tell their clients or their sellers, hey, it sticks with the home. You won't be able to sell it to anyone for a higher amount. However, the misconception is that FHA buyers and VA buyers cannot bring money to the table, and they can. They can fill in that gap, but agents don't know that. And we have to educate them and tell them that, because then we would get a lot more done, a lot more easily, a lot of offers accepted, and would level out the playing field a little more.
Well, and for those that are watching, just to clarify, you can't do another FHA or VA loan and exceed that sales price. That doesn't mean that you couldn't use that appraisal and they could pay more, or a different buyer could use conventional.
Right, correct, yeah.
What do you think, Rachel? What are you saying?
Now, didn't they lower that window in terms of the amount of time that appraisal sticks with that property? I know originally it was a longer period of time, but I thought they shortened that up a bit.
I thought I read something recently about that too, but it was 180 days, right?
That's how I know it, but there are things that change all the time. For instance, this week, while we're talking about FHA, one thing that was a negative for FHA buyers comparatively was that student loan debt was calculated at 1% of the balance. And just this week, FHA made the change to 0.5 point. So I think we're going to see more FHA buyers that might qualify that otherwise had not in the past. So that's
I might go buy a house now, guys.
Right. Well, that was something that they brought up yesterday in that video clip that I sent Jen and Saul too, talking about that student loan.
Well, and they also made a point of condo qualifying, that it's easier, hot qualify, or whatever they called it, that easier to qualify. And just this one move would free up X millions of units or some certain number of units to be available in the marketplace because of those projects that weren't FHA approved that are now going to be FHA approved quicker, faster, less expensive or something. So that was another in this recent bill that was, or rules that were recently released by the FHA.
Yeah, and a lot of people don't know about that you can get, like, even if the condo association is not FHA qualified, that you can get the one condo
like a spot approval.
Yeah.
Right. They don't, but what seller's going to do that in this market? I mean, it would take a really stellar, exceptional offer for a seller to say, okay, I'll go with that instead of the 7 other offers on the table who are also great and going conventional.
Very true.
Now we're also assuming that the market, and maybe it is super hot everywhere in the country. And while the feedback we get, there might be some places where that's makes sense.
Yeah.
Right?
Yeah. Well, a couple things that come.
Not in my mind.
I'm sorry. Go ahead.
I was just going to say a couple things that come to mind as we're chatting is that, I think the borrowers need to stand on their own and not just be considered based on what financing they're offering, because I think more than importantly, it's who's the selling agent or the buyer's agent and what's their reputation and quality as far as negotiating a contract. Also, the quality of the lender that verified it. I'd rather take an FHA buyer of a strong lender that you have a relationship with or know their reputation versus a conventional like lender that's an online house or a poorly, perceived lender.
100%.
Because you can, I mean, any loan officer can mess up any loan and not ask all the right questions. And any borrower can get a pre-approval that turns into something that's not valid at the end. So I think the quality of the pre-approval and the team that's presenting the offer should be, in my opinion, the first thing that you look at when you're looking at multiple offers.
Mm-hmm. I think it's interesting. So I was talking with a group of other realtors who are involved in the board a lot. And I think we live our lives as realtors kind of scared that we're going to be, discriminating against someone. So people get so paranoid, and rightfully so. We have to have that because, if all of these movements toward equality, and especially equality in housing now, it's a really important thing, but we get scared to do anything. And I think that's why people say, oh my gosh, no, you can't discriminate against FHA or VA loans. Well, they're not a protected class. And someone brought up the fact, well, aren't you inherently discriminating against them because most FHA buyers are minorities? But that's not true.
Right.
The stats will show that it's mostly Caucasian buyers, so who use FHA loans. VA, I don't know the stats on it, but it's not a case of what they call disparate impact, which is rules that end up negatively affecting a certain group of people unintentionally. But I think like we're doing today, it's just about educating people and knowing your options and not being afraid to ask questions or to say, well, can we do this? Or what if?
Mhm.
And just try to figure it out.
Yeah, I think if you go back and look, again, we talked about FHA founded in 1934. What was its purpose? First-time home buyers and affordable housing. And then what was the purpose of VA loans? To allow veterans to be able to get into properties. Again, both of them to enhance home ownership in the United States. So these are just programs to make home ownership more of a reality for more people.
Yeah.
One advantage of VA and FHA, which was always a big selling point, and I think in low interest rate markets been lost. If you do a VA or an FHA loan, those interest rates are assumable. So when our buyers go to sell in 10 years and they purchased in a market of 3% and maybe they overpaid on the property, maybe they didn't, we don't know what the future will hold, but maybe their loan becomes more attractive to a future seller. So there is that.
That's a good point. I always forget that.
Yeah.
Yeah.
We haven't had to use it.
Yeah.
The first home I ever purchased, I used my VA eligibility. I substituted my VA eligibility for the VA eligibility of the homeowner because the rate was so great. It was 10%.
Oh my God.
1978. It was 10%. And so 10% was a great loan. And, and people back then, they said, oh, rates will never go below 10% again. So that was a great deal. And it allowed me to buy that. I've since refinanced the house using my VA loan 6 times right now. And I'm in the process right now. Now, I have to tell you, I'm using Navy Federal Credit Union. It's the worst experience I've ever had. It's a 40% loan to value, 40%. My FICO score is like 800. The payment's going to be lowered by the new loan. And we're like 120 days into the process. And they keep asking me for a W-2. And I keep telling them, I don't have a W-2. I can send them K-1s and I can send them corporate. And it's amazing. It is a nightmare. Anyway.
Jen, do you do California?
It just depends on
go
who's
local.
Working.
Saul, you got to go local, not national. I hear this all the time.
Yeah.
The big lenders, consumers don't realize they're not efficient.
Oh, terrible. Worst platform, no customer service, awful.
Let's like dispel some myths. So what are we hearing? What are we hearing about like FHA and VA loans that like, what's the pushback? Rachel, what's one of the big ones that you hear all the time?
Right now, the vast majority of the buyers that I've been working with and that I see, as a listing agent when they're coming in, most of them here in this market are conventional and or cash. I'm not seeing a whole lot of FHA right now. I think because if the client or that particular buyer has the ability to go conventional, that lender will switch them to conventional so that they're more appealing on paper. The big challenge we see around here in this market is the fact that a large portion of the condominium complexes are not FHA approved. And if you go to the association or the board and suggest that maybe they explore that option so that they open up their buyer pool to a larger number of people when these units turn over, they come at you so hostily, like, we do not want riffraff in the building. We don't want this. We don't want that. They don't want any of it. Therefore, they refuse to even acknowledge it. So that's become a big challenge here, is getting these condo associations to understand, or even the boards that are going to make these steps towards that, to understand that this is ultimately in the long run for them better than not allowing FHA at all. Trying to explain that you're taking a buyer pool.
Yeah,
right. You right now your buyer pool is only this. Why wouldn't you not want it to be this?
So then the underlying pushback on that is that it's for people who couldn't really afford the property. Which
exactly, which couldn't be further from the truth. I mean, in all reality, if I'm living in an association or something that's governed by an association, I would much rather prefer having an owner occupant as a neighbor than having an investor buy the unit and rent it to a tenant who isn't going to give a what about keeping the property up. Mm-hmm. And for some reason, it's really hard to get through to those associations and those boards for them to understand that it might hurt in the short term because you're going to limit your buyer pool to not including investors. They're not going to buy there anymore, because if you grandfather that in, that's part of the process of getting FHA approved, is to cut down on those rentals.
Right.
And then they're like, hey, well, then we're gonna lose buyers. Well, you might for the very short term, but in the long run, it's going to take maybe a year for that to recover, and then you're good to go. There was a building in where I'm at here that for several years was cash only. Because they had so many rentals in the building that it was over the maximum amount that would even allow any type of financing at all. Mm-hmm. And they wouldn't allow investors anymore. So they passed that. And then so now their buyer pool was the owner occupant walking down the street with a suitcase of cash in their early 20s.
Yeah, but you're in Chicago.
They're on $120,000 price point.
Right.
It was a nightmare, but ultimately it worked out in their favor. But getting through to people, condo boards, even, especially, that's kind of been
getting them to do anything is like pulling teeth.
Right.
Absolutely. They just really, no. I haven't met a condo or an association or management company that has been worth much of anything.
Hey, Jen, so is the myth about like FHA was designed and is for lower income clientele, is that true or false?
Well, there is not an income cap on FHA, and there is not an income cap on VA. There is one on USDA, but it's $100,000 for the family or more. So I don't consider any of those low income. There's reasons why people go FHA. A lot of it is they just don't have a large down payment. Another reason is maybe they have one person in the household that needs to qualify for the loan, and they don't have documentable income that qualifies for another person. So their debt to income might be high, but they still have a good credit score.
Yeah, I have a buyer right now who's approved up to $400K, plenty of cash, makes good money, but unverifiable income on his wife's side. And I mean, he can only go FHA. So, it's my job to tell the agent when we find a house we write on, like, hey, we can cover that appraisal gap if something happens.
Right.
Yeah.
The other thing for FHA, which I have a lot of applications currently for this, is it's one of the only low down payment options on an owner occupied multifamily. So that's a huge.
You can't do conventional on that?
Not low down payment. You can do 3.5% down on up to a 4-unit FHA.
I mean, that's great.
I mean, that's amazing, right? You have to have, if it's a 2-family, you don't have to have reserves. If it's a 4-family, you need 3 months reserves. So if the mortgage payment's $2,000, you need your down payment plus $6,000. But that's a real advantage.
That's awesome.
And if you were going to do conventional, would it have to be how much down?
25%.
Yeah, that's a huge difference.
Absolutely.
Yeah.
That's it. And what is one thing that you're hearing? What's one myth that you're hearing a lot of?
I think the biggest myth is that if the house doesn't appraise on an FHA or a VA, the buyer can't bring money to the table.
Right.
That's absolutely not true. They can. And they do. I mean, we've all had it happen.
You know
There is
what?
the
Where did that
FHA.
come from? Do you know? It seems in the back of my head, and I used to teach real estate principles and practices and finance. Then the back of my head, there's something that where there maybe was at some time some type of regulation that said you couldn't, and it changed and nobody knew.
Well, there's the FHA amendatory clause, which you do have to have signed. And it says that you don't have to require the buyer to pay more. I think that the have to, the not have to is perceived as you can't.
Mhm.
Right.
Correct. That's true. Yeah,
But
I
if
can
you
see that.
agree to it in the contract and you still have to sign the amendatory clause, then they still have to be in contract, right?
Right. Well, and the thing is like, it just can't be financed more than 96.5% of appraisal value. But there's nothing that says that if you want to put an extra 10,000 down, you can.
Mhm.
You know, when you think about it, in a low interest rate environment, if you're the property marketplace where you're operating is a marketplace where FHA loans make sense financially. And I
Yeah.
don't remember the limits, but the limits might not apply in many areas. They didn't apply years ago in San Diego. They
Mhm.
might not apply, but if they apply in your area, then it's a tremendous thing to look into. Just offers opens up all kinds of doors. So people really should, if it fits, right? Again, you got to look at the economics. But if it does, I can't see any. It's not about keeping people out of the marketplace. It's about bringing people into the marketplace.
Well, I
and
mean, why
to your
make
point,
your cash? Why not? I mean, you can make more money if your FHA interest rate is only 3%, and you can either sink 3.5% into that, or you can take 20% of money and put it in. You can make more than 3% on your money. Like, why not put less down? It makes no sense. I
Plus, a
mean,
lot of people don't have it to put down.
right.
Yeah,
And
I-
the
Saul's
biggest thing-
point about, oh, I'm sorry, go ahead.
The hugest part I think that has really changed the stage right now is just that rents are exceeding the house mortgage payment.
Right.
That was never the case. You know, like it wasn't like I'm willing to pay more because I can go rent something for cheaper. Now it's like a 3 or 4 bedroom rental, even if you could find one, would exceed any cost of what the mortgage would be with 3.5% down or 3% down.
Which
on
is
a
good for me
low
in my
interest rate.
rentals. Yeah.
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 Well, and I think what Saul was saying earlier too about putting in perspective and the limits in how they apply to your marketplace. What the FHA loan limit now is what, 417 in that vicinity? Is that right?
In our market, it's 350. It's some random number.
Okay, so I believe where we're at here, it's 417. So if you look at where I'm in the couple communities that I'm in, the average price point is about between 250 and 350, just say. So if the FHA loan limit is 417 and you're worried about bringing in riffraff, if your average price point is 250 to 350 and you can do an FHA loan up to 417,
Right.
417 gets you a really nice house.
Right.
So that doesn't jive.
Right.
So that's where I kind of explain to people, hey, if this is what you're worried about, don't worry about it. Especially going into a condo building, you're worried about who's going to buy the $110,000 unit when they could, in theory, borrow up to $417,000 with this program. Don't worry about that.
Mm-hmm.
Yeah, so to give you a single family in, for most of the viewers who are probably in Hamilton, Claremont, Butler, and Warren County, 356, 362. And then a 2-family is 256, 275, or 456, 275. A 3-family is 551, 500, and a 4-unit is 685, 400.
Dang.
Dang. I thought the single family was higher, but
356. So you're about 365 top end purchase price.
yeah,
But certainly, another reason, and this is another reason why people might go FHA, you've got bankruptcy and foreclosure short sale lending
Right.
rules that a conventional borrower has to wait 4 to 7 years. So like you might have someone who has a great job, maybe they fell on hard times for health or whatever reason. I mean, we are all human, things happen. Those are more flexible guidelines that allow them after 2 years on a bankruptcy and 3 years on a foreclosure. So you might have a really strong borrower that just was down on their luck, maybe for some reason, and that program is attractive for them.
Absolutely.
I think bottom line is like, it's just a loan program. And that's why there's a lot of varieties of loans, because different people are in different situations. And so it doesn't say anything about the borrower, well, except the VA one, like you have to be a veteran, right?
Right.
But like,
right.
that's it. Like, it doesn't say anything else about the actual borrower. That's exactly why you need to like talk to the lender and say how far along, like you would any lender, how in any loan product, like how far along are you in the process? What documents are you still waiting on? Right? Like, find out, is this really a pre-qualification? You know?
Right. It shouldn't come with any stigma. It just really shouldn't.
no
based on
reason.
the fact that, no, there's no reason for it. Just like anything else.
But I think like
It's a loan.
Saul's
It's a loan
point,
product.
it did start off trying to bring more homeowners in, and these were homeowners that otherwise would not have had housing. But I feel like now it's changed to include a lot more people. Like, for
Yes.
example, like the student loans. I mean, how many of these kids have such high student loans, they could never buy a house. They have all this money, but they can't get a loan. It's ridiculous.
Absolutely.
I don't know. Well, thank you for being on, guys. Oh, Saul, do you have something to
I was
say?
just saying, so a number of things are changing. Things will continue to change. And so it's imperative that realtors understand that loans are products.
Yeah.
And there's a lot of detail to these products. And so you must have a cursory knowledge of the products that are available. And the more you have, the better. And you really need to have somebody on your team that understands the changes. And that's why most successful realtors have a lender that they work with, somebody that really understands the ins and outs. And that's why they're more productive and they sell more real estate. And it's a pretty simple formula.
It is pretty
Absolutely.
simple, for sure. Well, Saul, if people want to get a hold of you, what's the best way?
Saul at bettercallsaul.realtor.
Oh yeah, Rachel, if people have a referral in Chicago.
Best way to reach me is by cell phone or text at 630-542-8688.
Awesome. And Ann, if they have a referral in Cincinnati.
Just give me a call. It's 513-205-5106.
All these old school people here. And Jen, where do you do Ohio? What other states do you lend in?
So I am licensed in Florida, Ohio, Indiana, and Kentucky. And then Ruoff is licensed in 47 states.
Wow.
And so if they would like to talk about mortgages, I like mortgages. My phone number is 513-796-6024. And my name is Jennifer Sheil, Sheil, and that's my website as well.
Awesome. Well, thanks a lot for being on, everybody. Have a good one.
Thank you guys. Have a
Thanks,
good one.
everybody.